What if the key to creating the future wasn't found in competing harder, but in daring to think differently? In 0 to 1, legendary entrepreneur and investor Peter Thiel flips the script on everything you thought you knew about startups, innovation, and progress. This isn't your typical Silicon Valley how-to guide filled with buzzwords and recycled ideas. Instead, Thiel lays out a bold, contrarian philosophy. True innovation doesn't come from copying others. It comes from creating something entirely new. This book is a wake-up call for builders, dreamers, and anyone tired of playing by someone else's rules. Thiel challenges you to stop following the crowd and start asking the hard questions, questions that uncover hidden truths, unlock new value, and push the world forward. Who is this book for? Anyone who's ready to break out of the competition trap and build a future only they can see. Whether you're an aspiring founder, an investor, or someone simply hungry to do meaningful work, 0 to 1 gives you the mental models and mindset shifts to discover and act on secrets that others overlook. Check build businesses that escape competition through monopoly power. Check create teams with deep trust, loyalty, and alignment. Checkmark. Think clearly about sales, scale, and technological leverage. Check design for long-term impact, not just short-term wins. Thiel's message is clear. The most valuable things are the ones that haven't been built yet. And if you want to be a part of creating that future, it starts with thinking not about what's been done, but about what's still possible. So if you're ready to go beyond imitation and into invention, this summary will walk you through the most powerful ideas from 0 to 1. Let's dive in. Chapter 1. The Challenge of the Future. The future is not just something that happens to us, it's something we create. That's the heart of what Peter Thiel wants us to understand as he kicks off 0 to 1. He opens with a question that seems simple but carries deep weight. What important truth do very few people agree with you on? At first glance, it might sound like a riddle, but it's really a test. A test of original thinking, a way to separate true innovation from recycled ideas. Thiel draws a powerful line between two kinds of progress, horizontal and vertical. Horizontal progress is what happens when we copy things that already work, going from 1 to N. Think globalization, taking working systems and spreading them across the world. Vertical progress, on the other hand, is when we do something completely new, going from 0 to 1. This is where real breakthroughs happen. This is how you build the future. Now here's the catch. Vertical progress is rare. It requires boldness, risk, and above all, independent thinking. You can't rely on blueprints because, well, no one's done it before. But Thiel argues that this kind of progress isn't just the domain of visionaries in Silicon Valley. It's a mindset anyone can adopt if they ask the right questions. Let's dig deeper into Thiel's warning about complacency. He believes our world has become too comfortable with incrementalism. We settle for small improvements, minor upgrades, better versions of what already exists. But what happened to moonshot ideas? What happened to dreaming big? He compares the optimism of the 1950s and 60s, when Americans believed we'd have flying cars and colonies on Mars by the year 2000, to the stagnation of today's ambition. We've become more cautious, more cynical. Our brightest minds are busy figuring out how to make ad clicks more efficient or how to deliver groceries a bit faster. But where are the world-changing inventions? And here's where Thiel strikes a chord. He says our education system, our business culture, and even our media discourage original thinking. We're taught to follow trends, optimize for safety, and avoid standing out. But that's not how the future is built. Thiel wants us to snap out of this copy-paste mindset. He pushes us to think about thinking. That's what sets great entrepreneurs apart. They don't just work hard or follow market signals. They challenge assumptions. They look where no one else is looking. He also makes an interesting observation about tech and non-tech industries. While we often hear that tech is booming, Thiel says we've confused the spread of technology with the creation of it. Yes, smartphones and the internet have changed everything, but how many companies are actually building new technology versus just using existing tools in slightly better ways? This leads to one of Thiel's boldest claims. In a world of abundance, most people are stuck in scarcity thinking. We have more tools, more knowledge, more capital than ever before, but we're not taking bold leaps. Instead, we optimize, we compete, we settle for more of the same. So how do we break free? Thiel says the first step is belief. You have to believe that the future can be different and that you can shape it. That might sound motivational, but Thiel is dead serious. In his view, progress isn't automatic. Stagnation is the default unless we push against it. And here's something that might surprise you. He's not against planning. In fact, he's very much pro-planning, just not the traditional kind. He believes successful founders don't just go with the flow or see what happens. They imagine the future they want to create, and they work backward from there. Think of Elon Musk. He didn't stumble into Tesla or SpaceX. He had a specific vision, a multi-planetary civilization powered by sustainable energy. Everything he built was in service of that goal. That's 0 to 1 thinking. One of the most important takeaways from this chapter is the idea of definite optimism. Thiel classifies worldviews into 4 categories. Definite optimism. I know the future will be better, and I have a plan to build it. Indefinite optimism. The future will be better, but I don't know how. Definite pessimism. The future will be worse, and I know why. Indefinite pessimism. The future will be worse, and we don't know what to do about it. The best entrepreneurs? They're definite optimists. They don't just hope for a better tomorrow. They build it, one step at a time, one bold bet at a time. And it's not just about business. Thiel believes that thinking this way, asking hard questions, rejecting groupthink, and daring to believe in a better future is the only way to solve the big problems of our time: climate change, education, healthcare, and more. To wrap it all up, Thiel's challenge in Chapter 1 is clear. Stop waiting for the future to happen. Start creating it. Don't settle for being part of someone else's plan. Write your own. Innovate. Question. Build. Because the leap from 0 to 1 starts not with technology, but with thought. Bold, original, defiant thought. And if you're serious about building something meaningful, your journey starts with that question again. What important truth do very few people agree with you on? Chapter 2. Party like it's 1999. To understand where we're going, Peter Thiel says we need to understand where we've been, and few periods shaped the tech world more than the wild, chaotic, and explosive 1990s. In this chapter, Thiel takes us back to the dot-com boom and bust, using it as both a cautionary tale and a source of timeless lessons. The late 90s were a party. Venture capital was flowing like champagne. Every new internet startup was the next big thing, and people genuinely believed that the old rules of business no longer applied. All you needed was a .com domain, a vague business model, and a buzzword-laden pitch deck to attract millions of dollars in funding. Companies like Pets.com were raising millions without ever turning a profit. Stock prices were soaring purely on hype. But just like every unsustainable high, the crash came hard and fast. In March 2000, the party ended. The Nasdaq plunged. Billions of dollars vanished overnight. Startups folded, thousands of jobs disappeared, and for a while the word startup became a punchline. Thiel was there. As the co-founder of PayPal, he lived through it. And what he saw wasn't just a financial crash, it was a mental reset. After the bubble burst, Silicon Valley adopted a kind of startup trauma. Founders became wary of ambition. Investors demanded leaner teams, smaller bets, and faster pivots. The new gospel? Stay scrappy, be cautious, avoid making big claims. But here's the twist. Thiel doesn't think the 90s were wrong because they were too optimistic. He thinks they were wrong for the wrong reasons. Let's break that down. Thiel identifies 4 big lessons that the tech world learned from the dot-com crash. Lessons he believes are actually misguided. Make incremental advances. In other words, don't be too ambitious. Just improve on what already works. Stay lean and flexible. Don't plan too far ahead. Adapt as you go. Improve on the competition. Don't reinvent the wheel. Just make a better version. Focus on product, not sales. Build it, and they will come. Now, to most of us, these sound like smart, practical startup advice. But Thiel disagrees strongly. He says these so-called lessons are just reactions to a traumatic failure, not strategies for real success. Let's take the first one, incrementalism. Sure, it's safer to improve existing products than to try something entirely new. But it's also less valuable. Creating a 5% better app isn't revolutionary. Thiel argues that the most valuable companies like Google or Facebook didn't start by tweaking what existed. They created something totally new, something people didn't even know they needed. Second, the obsession with being lean and flexible. Thiel calls this a recipe for mediocrity. If you're constantly pivoting, then you don't really believe in your vision. Great businesses, he says, start with a plan and stick to it with conviction. Think of Amazon in its early days. Jeff Bezos wasn't playing it safe. He had a vision to become the everything store, and he poured every dollar and every decision into that long-term goal. Third, don't focus on competition, focus on monopoly. This might sound counterintuitive, even dangerous, but Thiel's point is that if you're in a crowded market, constantly fighting for tiny margins, you're in a losing game. Real value is created when you offer something no one else does, when you dominate a market because you're so different, not just better. And finally, the idea that sales don't matter, Thiel flat out rejects that. In his words, if you've invented something new but you haven't invented an effective way to sell it, you have a bad business. Even the best product in the world needs to be marketed and sold effectively. Just look at Apple. Steve Jobs was a master of design and innovation, but also of storytelling and selling. So what should we learn instead? Thiel offers his own set of counter-principles based on what actually makes startups succeed. It's better to risk boldness than to risk triviality. A bad plan is better than no plan. Competitive markets destroy profits. Sales matter just as much as product. It's a powerful reversal. Thiel wants founders to stop being afraid of the dot-com ghosts and start thinking like builders again. He urges entrepreneurs to embrace long-term vision, to chase monopolies through originality, and to never underestimate the importance of a strong sales strategy. He also makes a striking observation about the post-crash mindset. People stopped dreaming big. The fear of failure became so strong that founders were afraid to sound ambitious. Investors stopped looking for bold ideas and instead hunted for safe bets. Small, fast-growing companies with exit potential, not world-changing missions. But Thiel says that fear is what's holding us back. The future doesn't get built by people who are scared to think big. It gets built by those who see the madness of the crowd and dare to do the opposite. To close the chapter, Thiel reminds us that the lessons of history can be helpful, but only if we question them. Blindly accepting the post-2000 startup playbook has led to a culture of small thinking. But if we want to build the next generation of truly great companies, we need to recover the boldness of the 90s, without the naivety. So don't party like it's 1999. Learn from it. Dream big, plan smart, sell well, and don't let past failures write the future for you. Chapter 3. All happy companies are different. Peter Thiel kicks off this chapter with a twist on the famous opening line from Anna Karenina. All happy families are alike. Each unhappy family is unhappy in its own way. But instead of families, he's talking about companies. According to Thiel, all happy companies are different because they've found a way to escape competition and earn monopoly profits. Unhappy companies, on the other hand, are all alike. They fail because they're stuck in brutally competitive markets with no way out. This chapter is about one powerful idea. Monopoly is the goal, not competition, not just surviving in the marketplace. Thiel argues that the most successful companies aren't the ones who fight the hardest. They're the ones who avoid the fight altogether. Think about Google. In the early 2000s, it was already dominating search. No one could really compete. That dominance didn't come from marketing tricks or being just a little bit better. It came from having something truly unique, a powerful search algorithm, massive amounts of user data, and brand trust. Google wasn't in a race. It had already won. Thiel flips the script on what we've been taught. While business schools praise competition and free markets, he sees competition as destructive. It eats away at profits, it distracts from innovation, and it leads to short-term thinking. In his words, if you want to capture value, don't compete, create a monopoly. So what exactly is a monopoly? It's not just a company with a big market share. It's a company so good at what it does that no one else can offer a close substitute. A monopoly doesn't mean gouging customers or being lazy. It means building a business so excellent that it owns its category. And here's where it gets interesting. Most companies don't admit they're monopolies, even if they are. Why? Because it invites regulation. Google never says, "We own search." Instead, they'll talk about competing with Amazon for ad dollars or Facebook for attention. They downplay their dominance. Meanwhile, companies in competitive markets do the opposite. They try to make themselves sound special, even when they're not. A pizza shop might claim, "We're the only organic, gluten-free, wood-fired pizza joint open past midnight in our zip code." It's niche bragging, but it's not a real monopoly. They're just spinning a crowded market as something special. Thiel calls this the lie of the startup pitch, where every founder tries to make their startup seem like it's both in a big market and totally unique. But in truth, most are stuck in fierce competition, offering slightly better versions of what already exists. Here's where the big takeaway kicks in. Monopoly equals value plus control. If your business creates real value and you're the only one doing it, then you control your market, and that's where the magic happens. That's when you can generate consistent profits, reinvest in innovation, and build long-term stability. But how do you build a monopoly? Thiel breaks it down into 4 key characteristics that all monopolies share. Proprietary technology. This is the biggest edge. It can be 10 times better than existing solutions, not just marginally better. Google's search algorithm was a leap, not a tweak. Network effects, products that get more useful as more people use them. Think Facebook or LinkedIn. The more users, the more valuable the platform. Economies of scale. The bigger you get, the cheaper your operations become. Amazon's logistics is a prime example. It's expensive to start, but efficient at scale. Branding. A strong brand is like armor. Apple's brand isn't just about design. It builds loyalty, trust, and a sense of identity that's hard to copy. But these advantages don't just appear overnight. Thiel emphasizes starting small and dominating a niche. He calls it the start small, monopolize, then scale strategy. Let's say you want to start an online bookstore. Competing with Amazon from day one is suicide. But what if you focused only on rare academic books? That's a tiny niche. You could dominate it, build your reputation, refine your logistics, and then slowly expand outward. That's exactly how Amazon started. Selling only books, then CDs, then everything. Most startups make the mistake of trying to go big too soon. They want to be the next Uber or Netflix, but they haven't mastered anything yet. Thiel says that real monopolies are built methodically, one niche at a time. Another key idea here, monopolies think long-term. Since they don't have to worry about beating the competition every quarter, they can afford to invest in research, talent, and innovation. Competitive companies, by contrast, are always in survival mode. They slash prices, copy features, and burn out trying to stay alive. Thiel also dives into the philosophy of competition. He says we glorify it too much. In fact, he believes our obsession with competition begins in school. We're trained to outperform classmates, ace tests, and win awards. That mindset bleeds into our careers, where people compete for jobs, titles, and promotions. But when everyone's fighting the same fight, no one's building the future. He shares an anecdote from his own experience. At Stanford, the smartest students didn't go into startups. They went into consulting, finance, or law. Why? Because those paths were structured competitions with clear rules and rewards. But they didn't create anything new. They were zero-sum games. For someone to win, someone else had to lose. In contrast, creating a monopoly is non-zero-sum. It's about making something entirely new, not winning an old game. That's why Thiel urges us to stop competing and start escaping competition altogether. The final message in this chapter is powerful. Don't be afraid to be different. In fact, the more unique your company, the more defensible it becomes. Stop trying to outdo your rivals and start focusing on being the only one who does what you do. Because in Thiel's world, it's not the best competitors who win. It's the businesses that make competition irrelevant. And that's what makes happy companies not just profitable, but powerful. Chapter 4. The Ideology of Competition. Peter Thiel doesn't just think competition is overrated, he thinks it's dangerous. In this chapter, he takes a philosophical and psychological deep dive into why we obsess over competition and how it ends up doing more harm than good, especially for entrepreneurs. Let's start with the basic assumption. We're taught that competition is good, that it drives innovation, lowers prices, improves quality, and keeps everyone on their toes. In school, sports, business, even dating apps, we compete. It's the game we're trained to play. But Thiel asks, what if this obsession with competition blinds us? What if instead of pushing us to create new things, it locks us into battles that waste our time, energy, and creativity? To make his point, Thiel draws on the story of two men, Larry Page, co-founder of Google, and Jerry Yang, co-founder of Yahoo. Google, from the start, had a clear vision. Larry Page wasn't trying to beat Yahoo at their own game. He wanted to build a new way to organize the world's information. Yahoo, on the other hand, got caught up in competition. Instead of focusing on its core strength as a portal, it started chasing Google, mimicking their search engine and ads model. In the end, Yahoo lost because it tried to compete, while Google won because it dared to be different. Thiel uses this as a broader lesson. Competition makes us reactive instead of creative. When you're focused on beating someone else, you stop asking the deeper questions like, is this even the right problem to solve? Or, is there a completely different approach that no one's seeing? He calls competition a trap of imitation. The more you try to outperform someone else, the more you end up copying them. And that leads to a downward spiral where innovation dies. One of the most memorable examples Thiel gives is from the world of academia. He talks about a friend who was a brilliant math student at Stanford. This guy was obsessed with being the best, always competing for top grades, fellowships, and recognition. He kept moving up the academic ladder, but with every promotion, his field got narrower and more competitive. By the time he got to the top, he was publishing obscure papers read by only a handful of people. He'd won the competition, but at what cost? His work had little impact, and he wasn't building anything that mattered. This is what Thiel calls the race to nowhere. You might win, but what do you really gain? Now, Thiel's not saying we should avoid all struggle, but he believes we should choose the right kind of struggle, the kind that involves invention, risk, and long-term thinking. Competing in a crowded space might make you feel like you're doing something important, but more often than not, it's just noise. He uses another example: restaurants. Opening a restaurant is one of the most competitive businesses on earth. Everyone thinks their food is special, but the reality is most new restaurants fail. Why? Because they don't have a monopoly. They're not offering anything so unique that people can't get it anywhere else. Contrast that with something like Tesla. Elon Musk didn't start by saying, "Let's build another car company." He said, "Let's accelerate the world's transition to sustainable energy." That wasn't just a marketing slogan. It was a different vision. He wasn't trying to beat Ford or Toyota at their game. He changed the game entirely. And that's Thiel's message. Don't compete, create. The biggest wins don't come from beating others. They come from building something new, something that escapes competition altogether. But why do we fall into the competition trap so easily? Thiel says it's cultural conditioning. From kindergarten onward, we're taught to perform for rewards. Grades, trophies, job offers. We're told that success means rising to the top of some pre-existing hierarchy. So we internalize this idea that life is a ladder, and our job is to climb it faster than anyone else. But the most successful founders, Steve Jobs, Jeff Bezos, Elon Musk, they didn't just climb a ladder, they built their own. They didn't play existing games better. They invented new ones where they made the rules. Thiel also introduces the concept of rivalry blindness. He says when you're in a rivalry, when your focus is fixed on a competitor, you stop seeing other possibilities. You're so locked into the game you're playing that you miss the chance to play a better game entirely. Take Microsoft and Google, for example. For years, they were obsessed with beating each other. Microsoft wanted to win in search. Google wanted to beat Microsoft in productivity tools. They wasted time and billions of dollars in the fight. Meanwhile, Apple, completely outside that war, was building the iPhone and revolutionizing mobile computing. While the giants clashed, a new leader emerged. So what's the practical takeaway? If you're building a startup, or anything really, don't ask, "How can I beat the competition?" Ask, "How can I avoid competition entirely?" Find a unique problem, create a unique solution, dominate a small market first, then scale outward. That's the monopoly mindset. And here's the real kicker. Thiel says competition doesn't just kill innovation, it can make us worse people. It brings out jealousy, insecurity, short-term thinking, and petty rivalries. Instead of working together to solve big problems, we end up tearing each other down in zero-sum games. The chapter closes on a note that's part warning, part inspiration. If you want to do something truly meaningful, if you want to build the future, you have to think differently. Don't be trapped by the ideology of competition. Step outside it, ignore the noise, and have the courage to create something no one else is even thinking about. Because while the world glorifies competitors, it's the creators, the monopoly builders, who truly change everything. Chapter 5. Last Mover Advantage. When most people hear first mover advantage, they think of companies like Amazon or Facebook getting to a market early and dominating it forever. But in this chapter, Peter Thiel turns that idea on its head. He argues that it's not about being first, it's about being the last. That's right. The last mover advantage is the real prize, becoming the final dominant company in a market. so good and so entrenched that no one can realistically take your place. First movers often fade away. Last movers build empires. Let's unpack what this means. Imagine a gold rush. The first person to find gold in the hills might make a fortune, but often it's the last one, the one who builds the mining company, owns the tools, refines the system, and controls the supply, who really cashes in. In the world of startups, being early gives you a chance to explore, but to win, you have to stick around long enough to own the space. Thiel uses PayPal as a real-world example. When they launched, they weren't the first digital payments company, but they were the ones who figured out how to scale fast, lock in users, create viral growth, and integrate tightly with eBay's ecosystem. That's what gave them a lasting edge, and eventually led to their $1.5 billion acquisition by eBay. So how do you become the last mover? Thiel says it's all about building a monopoly through deep, strategic advantages. In this chapter, he breaks down exactly what that looks like. 1. Proprietary technology. This is the most critical piece. Your product has to be 10 times better than anything else on the market, not just 10%, but 10 times. If it's only a little better, it's easy to copy. If it's vastly better, you build a wall around your business. Think of Google's search engine in the early 2000s. It wasn't just slightly better than Yahoo, it was way better. That gave them a defensible edge. Thiel warns against incrementalism. If your idea is a slightly better version of something else, you're in for a painful fight. To win long-term, your product must be in a league of its own. 2. Network effects. This is when a product becomes more valuable as more people use it. Facebook is the classic example. Its value to users increased exponentially as more friends joined. But network effects aren't automatic. They only work if your product is already useful to the first few users. Thiel emphasizes this because many startups build network effect businesses that are totally useless until millions of people join, which rarely happens. The takeaway? Design your product so even a small group can benefit from it immediately, and then make it better as more people come in. 3. Economies of scale. Scale isn't just about size. It's about unit economics improving as you grow. Amazon lost money for years, but every additional warehouse, every improvement in logistics brought down their per-order cost. Now they're a retail titan because they invested in scale early, even when it wasn't profitable yet. For your business, Thiel says, plan for scale from the beginning. Don't just think about what works for 100 users. Ask, will this model work for 1 million? 4. Branding. While tech founders often dismiss branding as fluff, Thiel says it's crucial for monopoly. Apple isn't just a tech company, it's a religion. That's not just because of sleek design or good marketing. It's because of a powerful, consistent brand identity that resonates deeply with customers. Your brand isn't your logo or your slogan. It's the feeling people get when they think of your company. That emotional connection can become one of your strongest competitive advantages. Now, let's talk about time, a key element in becoming the last mover. Thiel wants founders to think long-term, really long-term, not just how do we survive this quarter, but what do we look like in 10, 20, or even 50 years? He uses Microsoft as an example. In the 90s, it was nearly impossible to imagine a PC without Windows. Microsoft had achieved last-mover advantage in personal computing software. They weren't necessarily the first, but they positioned themselves to be the final word in that space until the internet, mobile, and open source began to shift the paradigm. And that's another point. Even if you reach last-mover status, it's not permanent. You have to keep reinforcing your moat. Complacency can kill a monopoly just as fast as competition. Thiel also explores the dangers of short-term thinking. Most companies want to go public quickly, show profits fast, or get acquired within a few years. But those aren't the companies that change the world. The most impactful businesses are built slowly, methodically, and intentionally to endure. Think about Tesla. Musk didn't build it to flip it. He built it with the belief that it would still be around decades from now, transforming how humans interact with energy and transportation. That's last mover thinking. Here's a key distinction Thiel makes near the end of the chapter. Creating value is not enough. You also need to capture some of the value you create. A lot of businesses provide value to users but fail to capture it. Newspapers moved online and gave away content for free, then struggled to make money. File sharing services changed how people consumed music. But the value was captured by Apple and Spotify, not Napster or LimeWire. You need both sides of the equation, a product that solves a real problem in a unique way. A business model that ensures you benefit from the solution you created. The ideal business? One that creates enormous value and captures a significant portion of it over time, with no real threat of disruption. That's what Thiel means by last mover advantage. So what's the big idea in this chapter? It's not about being first. It's about being right, being unique, and sticking around long enough to make your position unbeatable. It's about building a business that can't be replaced, a company that becomes so good at what it does, it becomes the default. Because in the end, the first one through the door often gets bloodied. But the last one standing, that's the one who owns the future. Chapter 6. You are not a lottery ticket. Peter Thiel doesn't hold back in this chapter. He goes straight for the mindset that dominates Silicon Valley and modern entrepreneurship, the belief that success is mostly about luck. He's heard it all. Startups are a lottery. It's all about timing. Nobody knows what works, and you just need to get lucky. But here's what Thiel wants to make crystal clear. You are not a lottery ticket. He calls this mindset indefinite optimism, the idea that the future will be better, but we have no idea how. So instead of planning, people hedge their bets. They spread out their risks. They hope something sticks. Thiel says that's not how great companies, and certainly not great futures, are built. Let's pause here. This isn't just a philosophical debate. It has real-world consequences. If you think life is random and success is luck, you'll never commit fully to anything. You won't make bold plans. You won't take big swings. You'll just dabble, diversify, and wait for magic. Thiel's argument is this. Great outcomes are never accidents. They're the result of definite planning, deliberate thinking, and bold vision. You don't stumble into greatness. You choose it, and then you work for it with intense focus. To explain how we got here, Thiel traces a shift in mindset over time. He says that from the 17th century to the mid-20th century, definite optimism was the dominant worldview. People believed in progress, and they had plans to achieve it. Think about the Industrial Revolution, the space race, the invention of the telephone and the airplane. These weren't the results of throwing spaghetti at the wall. They were the fruits of bold engineering, long-term vision, and precise execution. But sometime around the 1970s, Thiel argues, that optimism became indefinite. People still believed the future would be better, but stopped thinking they could shape it directly. Governments got bigger but less ambitious. Education became more about checking boxes than pursuing mastery. And entrepreneurship? It turned into a lottery mindset. This change shows up in how we approach life. In education, students are told to study hard so they can keep their options open, but not to commit to anything too soon. In career planning, people jump from job to job, industry to industry, always exploring, rarely building. In startups, founders are taught to try lots of ideas, iterate endlessly, and pivot constantly, just hoping something hits. But here's Thiel's challenge. What if the future isn't something that just happens? What if it's something you build on purpose? He contrasts two kinds of optimism. Indefinite optimism. The future will be better, but I don't know how. This is the lottery ticket mindset. It leads to vague goals, risk-averse decisions, and shallow strategies. Definite optimism. The future will be better, and I know how I'm going to make it happen. This is the mindset of builders, creators, founders with vision. It leads to deep focus, bold planning, and transformational impact. Thiel doesn't just preach this, he lived it. At PayPal, he and his co-founders had a very specific goal: to create a new kind of digital currency for the internet. It didn't quite turn out that way. They pivoted into a payments platform, but the point is they weren't just tossing out ideas and hoping for luck. They had a vision. They took a stand. One of the boldest claims in this chapter is that people overrate randomness because they're afraid of being wrong. If success is luck, then failure isn't your fault. It's comforting. It takes the pressure off, but it also takes the power away. When you believe outcomes are random, you won't take responsibility for shaping them. You won't commit to a path or take the time to craft a long-term strategy. Thiel calls this a failure of courage. Now, Thiel is not naive. He's not saying luck doesn't exist. Of course it does. Timing matters. Markets shift. People get lucky. But his point is that luck alone doesn't build world-changing companies. And relying on luck isn't a strategy. It's a surrender. He offers an important contrast between two types of thinking. Indefinite planning. You prepare for multiple outcomes, stay flexible, and pivot endlessly. Definite planning. You pick a goal, make a plan, and move forward with conviction. Thiel wants us to rediscover the power of definite planning. This doesn't mean rigid, step-by-step micromanaging. It means having a clear vision of the future you want to create and working backward from that vision to make it real. A key example? Elon Musk. He didn't say, "I hope electric vehicles become popular and maybe we'll sell a few." He said, "We are going to accelerate the world's transition to sustainable energy." That's definite optimism. That's the opposite of playing the startup lottery. Another gem from this chapter: Thiel says the most successful people design their own future. They don't copy what others are doing. They don't wait for the stars to align. They don't spread themselves thin. They go deep on one vision and give it everything. The most dangerous thing, Thiel argues, is drifting. If you don't have a strong plan, you'll fall into someone else's. You'll compete on someone else's terms. You'll spend your energy reacting instead of creating. So what does this mean for you? It means if you want to do something meaningful, start a company, write a book, build a product, lead a movement, you have to commit, make a plan, bet on yourself, and stop waiting for luck. You are not a lottery ticket. You are a builder, a thinker, a visionary, but only if you choose to be. The future doesn't belong to the lucky. It belongs to the determined. Chapter 7. Follow the money. If you want to understand a business, really understand it. Peter Thiel says, forget the hype, forget the user numbers, forget the press releases. Instead, follow the money. This chapter is all about economics, but don't worry, it's not dry theory. Thiel makes it clear, engaging, and brutally practical. Because if your startup can't make money, it doesn't matter how cool your product is or how much media attention you get. Revenue is reality. Let's start with the foundation. Value creation versus value capture. Most people get excited about the first part, creating value. That's the fun stuff. Building a great product, solving a real problem, making people's lives better. But Thiel says creating value isn't enough. You also have to capture some of that value for yourself. Take newspapers. For decades, they created massive value, informing the public, shaping opinion, supporting democracy. But when the internet came along, people wanted the same value for free. Newspapers still created value, but they couldn't capture it. Their revenue collapsed. Now compare that to Google. It gives users free access to information, but also runs the most profitable advertising machine in history. Google didn't just create value, it built a system to capture billions of dollars in that value. The lesson? Your company must do both. If you're not capturing value, you don't have a business. You have a charity. So how do you measure whether a startup is on the right economic track? Thiel introduces the power law of venture returns, a concept most people in business still don't fully grasp. Here's the big idea. A tiny number of companies generate nearly all the returns. If a venture capitalist invests in 100 startups, 1 or 2 of them will return more than all the others combined. And the same applies to your time, your energy, and your ideas. Not all opportunities are equal. Some are 10 times or 100 times more valuable than others. This is where most people go wrong. They think linearly. They assume if one business grows 10%, another will grow 20%, and so on. But in reality, great businesses grow exponentially, and mediocre ones flatline. That's why Thiel says you should focus obsessively on the handful of opportunities that could deliver massive returns, and ignore the rest. He tells us about Facebook. When Thiel invested in Facebook in 2004, it wasn't obvious that it would become a juggernaut. But he saw something unique: insanely high engagement, viral growth, and a founder with vision. That $500,000 investment eventually returned over $1 billion. A single bet paid for an entire portfolio. The key takeaway? One great investment is worth more than 100 average ones. One great company is more valuable than a whole market of pretty good ones. Now let's talk about business models, how companies actually make money. Thiel breaks it down with a simple formula: profit equals price minus cost times volume. It seems obvious, but it's shockingly overlooked. Many startups get caught up in user numbers or eyeballs, but don't ask the hard question: how much can we charge? And how much does it cost to serve each customer? Let's say you're selling software for $1,000 a month. If it costs you $800 to onboard, support, and maintain each customer, you're only making $200 in gross profit per month. That might not be enough to cover your sales team, engineers, rent, or growth. And if your customers don't stick around, you're burning cash fast. That's why Thiel insists founders should design for profitability from day one. He's not saying you need to be profitable immediately, but your model needs to make sense. You need a path to sustainable, scalable profits, or you're just gambling. He then outlines 4 key business model characteristics that lead to strong value capture. Proprietary technology. A product that's 10 times better can command higher prices and lower costs. That's great for profits. Network effects. The more people use your product, the more valuable it becomes and the harder it is to leave. Economies of scale. As you grow, your cost per unit drops, making each sale more profitable. Strong branding. With trust and emotional loyalty, you can charge premium prices. Combine these factors and you're on your way to building a monopoly, not just in market position, but in profit margins. Now let's talk about revenue concentration, something most investors and founders fear. They think having one big customer, one revenue stream, or one product is risky. But Thiel flips that logic. He says the best companies focus intensely on one core thing and do it better than anyone else. Diversification is often just a hedge against uncertainty, but if you believe in your product and your strategy, you don't need to hedge. You double down. PayPal, in the early days, made almost all its money from eBay users. That wasn't a flaw, it was a feature. It allowed them to grow fast, dominate one niche, and expand from there. Thiel's warning: don't confuse diversification with strategy. Strategy means picking something valuable and going all in. As the chapter winds down, he returns to the idea of power laws. Most people spread their bets too thin. They chase too many opportunities. They build too many products. But the truth is, one powerful idea executed well can be worth more than everything else combined. This applies beyond startups. Want to build wealth? Find the investment with asymmetric upside. Want to have impact? Focus on the one cause where you can make a 100 times difference. Want to build a meaningful career? Go deep, not wide. In other words, follow the money, but not just any money. Follow the huge money, the exponential returns, the value no one else sees yet. Because in the end, business isn't about luck or hustle or even innovation alone. It's about understanding where the value is and making sure you're the one who captures it. Chapter 8. Secrets. Peter Thiel believes the biggest business opportunities lie in the places no one else is looking, not because they're hidden, but because most people refuse to believe they even exist. That's the core idea of this chapter. There are still secrets in the world, and if you want to build a truly great company, you have to find one. But first, what is a secret really? According to Thiel, a secret is something that's true but not widely known or accepted. It's an idea that goes against the grain. It might seem weird, uncomfortable, or even crazy at first. But if you believe in it and you're right, you've found your unfair advantage. He puts it this way: every great business is built around a secret that's hidden from the outside. And yet, in today's world, we've stopped believing in secrets. The dominant belief is that everything important has already been discovered, that the world is an open book, that we live in a time of transparency, crowd wisdom, and endless access to information. So if a breakthrough hasn't happened yet, maybe it's just not possible. Thiel calls this skepticism masquerading as intelligence. It feels safe. It sounds smart, but it's killing ambition. Because the truth is, there are still many secrets left to uncover, especially in business, science, and society. But they're not obvious. You have to look for them, and most people don't. Let's dig into why that is. Thiel argues that we live in a culture that's increasingly indefinite and egalitarian. We avoid making bold claims. We celebrate surface-level consensus. We prefer open-ended exploration to definitive answers. And worst of all, we're taught from a young age that there are no secrets, just hard work, credentials, and following the rules. He uses education as a prime example. From grade school to college, students are rewarded for regurgitating information, not for discovering new truths. We don't encourage them to ask, "What's missing from the syllabus?" We train them to ask, "What's going to be on the test?" And this mindset follows us into adulthood. Most people take the world as it is and try to navigate within it. But entrepreneurs, the great ones, look for what's not there. They ask, "What's broken? What's overlooked? What's possible that others say is impossible?" That's how great companies are born. Thiel gives some memorable examples. Airbnb started from the belief that ordinary people would rent out their homes to strangers on the internet, a secret most thought was absurd or dangerous. Uber assumed people would get into a stranger's car instead of hailing a taxi, another idea that felt insane until it worked. Facebook understood that people didn't just want an online directory, they wanted a curated social identity. That secret helped them blow past MySpace. In every case, the founders saw something the rest of the world didn't. They had conviction in an unpopular truth, and they were right. So how do you find a secret? Thiel says it starts with asking questions no one else is asking. Here are two he recommends. What important truth do very few people agree with you on? What valuable company is nobody building? These are not easy questions. They force you to think differently, to leave the herd. But they're also filters. If you can answer them with honesty and courage, you're on your way to discovering something big. But beware, not all secrets are equal. Some secrets are nature secrets, things hidden by the physical world. Think physics, medicine, or engineering. These require scientific discovery or technical innovation. Other secrets are people secrets, truths about how humans behave, what they want or what they're afraid to admit. Many of the best business ideas come from these. Why? Because human behavior is full of contradictions. People say one thing, do another. They have unmet needs they don't talk about. And that gap between what people say they want and what they actually want, that's where businesses are born. For example, people used to say they valued privacy online, but they happily gave their data to Facebook and Google in exchange for convenience. Facebook understood that secret. Connection beats privacy. Thiel also points out that big secrets are harder to find, but easier to defend. Once you discover something truly valuable that others missed, you can build a lasting company around it. But the hard part is this. The more original your idea, the more people will resist it at first. That's where courage comes in, because secrets come with risk. If you're wrong, you might look foolish. You might lose money, you might fail. But if you're right, you get to build something the world didn't think was possible. The key is to believe that the world still has white space, that there are frontiers no one has explored. It's about thinking for yourself, trusting your instincts, and pursuing the truth, even when others laugh at it. And that's what makes a great founder. Not just intelligence or hustle, but the belief that you can uncover something hidden and turn it into something real. Thiel ends the chapter with a challenge. The best entrepreneurs know this. Every great business is built on a secret. If you want to build a better future, you must believe in secrets. So ask yourself, what do you know that others don't? What truth do you believe that the world hasn't caught up to yet? Because in the age of noise, distraction, and conformity, the biggest competitive advantage isn't funding or fame. It's the ability to see what others can't and act on it. Chapter 9. Foundations. If you get the beginning wrong, nothing else matters. That's Peter Thiel's central message in this chapter, and he's not being dramatic. In startups, your foundation is everything. The choices you make early, your co-founders, your company structure, your mission, are like pouring the concrete for a skyscraper. If it's cracked or unstable, no amount of genius engineering later can fix it. Thiel starts with the blunt truth. Most startups fail, not because the product was bad or the market was wrong, but because the founding team fell apart. Co-founder drama is startup kryptonite, and yet most people treat those early relationships casually, almost like summer flings. But in reality, choosing a co-founder is more serious than getting married. You're going to be in the trenches together, under pressure, dealing with stress, doubt, money problems, and big decisions. So the first rule of strong foundations: don't start a company with strangers. Thiel has seen too many startups formed between people who just met at a hackathon or a networking event. Sure, they're excited, full of energy, and aligned on paper, but they haven't been tested together. They don't know how the other reacts when things go wrong. Instead, Thiel encourages starting with people you've already worked with or deeply trust. People with shared values, not just shared skills. And that leads to the next point: roles and responsibilities. Even among close friends or longtime collaborators, conflict can creep in if boundaries are blurry. That's why it's critical to clearly define who does what from day one. Who's the CEO? Who's in charge of engineering? Who owns product? When there's ambiguity, decisions get delayed. When there's overlap, egos clash. This ties into another mistake Thiel warns against: equal equity splits. Many founders, in the spirit of fairness, split ownership 50-50 or 33-33-33. But that only works if your contributions stay perfectly equal, which they almost never do. Over time, someone works harder, someone takes more risk, someone creates more value. If ownership doesn't reflect that, resentment builds. Thiel says unequal equity is not unfair, it's honest. You have to reward leadership, accountability, and risk-taking. Someone has to be ultimately responsible, and that person should have the largest stake. Now let's talk about the legal structure. Thiel recommends incorporating early, preferably as a Delaware C corporation, which is the gold standard for tech startups. It makes raising money easier, issuing stock simpler, and keeps your company investor-friendly. But beyond paperwork, what really matters is that you take the business seriously from day one. Casual arrangements lead to casual outcomes. Then there's the topic of board control. This is huge. Thiel advises founders to retain control of the board for as long as possible. Why? Because giving away board seats too early, especially to investors, can limit your ability to lead. Many startups get pushed around by boards who don't understand the vision, or worse, who want to steer toward a quick exit instead of long-term growth. The goal is to build a company, not a lottery ticket. That means protecting your ability to make tough calls without asking for permission. Control isn't about ego, it's about focus. Another foundational pillar is company culture. This might sound fluffy, but Thiel insists it's critical. Culture is what sets the tone for every decision, every hire, and every conversation. If you don't intentionally create culture, it will accidentally create itself, and usually not in a good way. At PayPal, for example, Thiel and his co-founders built a culture around intensity, excellence, and mission. They didn't hire people who just wanted a job. They hired people who believed in the mission of transforming money. That focus created loyalty, drive, and a shared language. It also created the PayPal Mafia, which went on to found LinkedIn, YouTube, Yelp, and Palantir. But culture doesn't happen by accident. You have to choose it, shape it, live it. This brings us to the question of mission. Every great company is built around a definite purpose. That doesn't mean you need to change the world with every startup, but you do need to know why you exist beyond just making money. Your mission is your North Star. It attracts the right people, repels the wrong ones, and helps you stay focused when things get messy, and they always get messy. If your mission is vague, or worse, purely financial, it will be impossible to build a committed, aligned team. Thiel gives this brilliant litmus test. The best startups might be considered slightly less extreme kinds of cults. That sounds scary, but it's true. Great startups have a strong sense of us versus the world. They have insiders and outsiders. They believe in something most people don't, and they're willing to work hard to prove it. So here's the checklist Thiel offers for building strong foundations. Choose co-founders carefully. Work with people you trust, not just those who look good on paper. Assign clear roles. Avoid overlap. Define who owns what. Split equity wisely. Fair doesn't always mean equal. Establish legal structure early. Take the business seriously from day one. Maintain board control. Don't hand over power too early. Build intentional culture. Every hire shapes your company's DNA. Define your mission clearly. Purpose fuels everything else. Foundations aren't sexy. They don't get headlines, but they determine whether your company thrives or dies. You can have the best idea in the world, but if your team is fractured, your equity is messy, and your mission is foggy, it won't matter. So before you build your product, before you raise money, before you chase growth, lay the foundation carefully, deliberately, and with conviction, because in startups, as in life, you only get to start once. Chapter 10. The Mechanics of Mafia. Peter Thiel isn't just being playful when he calls PayPal's early team a mafia. He's deadly serious. In this chapter, he argues that every successful startup is more than just a company. It's a kind of tight-knit tribe, bound by loyalty, shared purpose, and deep alignment. And if you want to build a lasting business, You don't just need smart people. You need the right people working together in the right way. So what does he mean by mafia? Think about what a mafia really is. Not the criminal version, but the metaphorical one. It's a group where loyalty runs deep, where trust is everything, where everyone is committed to a shared code and no one breaks rank. That's what Thiel built at PayPal, and it's what he believes all great startups need, a culture of intense belonging. Let's rewind to the early PayPal days. Thiel and his co-founders didn't just hire for skill, they hired people they already knew and trusted. They brought in former classmates from Stanford, fellow engineers from their networks, people who shared the same worldview. And yes, they were ridiculously smart, but more importantly, they were aligned. They believed in the mission. They worked like maniacs. They trusted each other completely. And when the company sold to eBay, that mafia scattered across Silicon Valley and built LinkedIn, YouTube, Yelp, Palantir, and more. Their shared experience and the trust they had in each other carried over. That's the power of a tight team. Thiel compares this to what most companies do. They hire a random collection of mercenaries. A few Ivy Leaguers here, a few resume rock stars there, some consultants, some MBAs. Everyone's qualified, everyone's competent, but no one's connected. And that's a problem, because when the going gets tough, and it will get tough, mercenaries cut and run. Mission-driven people stay. Mercenaries protect their egos. Mission-driven people protect the company. Mercenaries follow orders. Mission-driven people take ownership. So how do you build a mission-driven team? Thiel says it starts with hiring people who believe in your mission and excluding those who don't. This sounds harsh, but it's essential. If someone is just there for the paycheck or the prestige, they won't fight for your vision when it's under threat. But if someone believes, really believes in what you're building, they'll do whatever it takes. That's why Thiel is suspicious of companies that claim to be non-hierarchical, flat or culture first, but hire without focus. He says the best cultures are intensely exclusive. They don't try to be everything to everyone. They create a strong sense of insider versus outsider. It's the opposite of corporate HR culture. He even gives the example of Google in the early 2000s. They had a rule. No one should be more than 1 or 2 steps removed from a founder. That ensured cultural coherence and direct transmission of vision. As Google grew, it became harder, but that early DNA stuck. The early hires shaped the future of the company. So what does this look like in practice? Let's say you're hiring your first 5 employees. Thiel says this is when every decision matters 10 times more. These people will set your culture. They'll influence every hire after them. If they're aligned, you build momentum. If they're not, you create confusion and politics. That's why early hires need to be mission-aligned. They believe in what you're doing beyond the salary. Intellectually in sync. They think in similar ways and can challenge each other productively. Socially cohesive. They get along. They trust. They share values. This is why company culture should be viewed like a cult, not in the creepy brainwashing sense, but in the sense of deep belief and shared identity. If your employees don't feel like they're part of something special, something different, you'll never achieve greatness. And yes, that exclusivity might turn some people off, and that's the point. Great cultures repel just as much as they attract. They say, this isn't for everyone, but if it's for you, you'll never want to leave. Thiel also challenges the Silicon Valley idea of company perks being culture. Free lunches, ping pong tables, and yoga classes are not culture. Culture is what people do and believe when no one's watching. It's what holds a team together when the product is failing, when the funding hasn't arrived, when everything is on the line. Another important insight: everyone in a startup should be working full-time. No part-timers, no consultants. If someone isn't fully committed, they're not really on the team. Thiel insists that startups are too fragile to carry dead weight. You need people who are all in, mentally, emotionally, and energetically. And compensation? Equity is more important than salary. Ownership creates alignment. If someone has skin in the game, they think long term. They care about outcomes, not just optics. One more thing, founder presence matters. Thiel argues that founders should be visible, accessible, and involved. Delegating culture to HR or middle managers is a huge mistake. Culture flows from the top, and it must be lived, not just preached. He ends the chapter with a warning. If you don't have a strong team, no amount of money or strategy will save you. But if you have the right people, people who trust each other, who believe in the mission, who are committed for the long haul, you can survive almost anything. Because in a world full of lone wolves and corporate bureaucrats, the startup mafia, the loyal, obsessed, mission-driven crew, is the most powerful force there is. And if you want to build something legendary, you don't need more perks. You need more loyalty. You don't need more headcount. You need more heart. You don't need a bigger team. You need a better tribe. Chapter 11. If you build it, will they come? You've got a brilliant idea. You've built an amazing product. You're confident it's going to change the world. But Peter Thiel wants to stop you right there and ask a brutal question. Do you have a plan to sell it? Because here's the hard truth, a great product is not enough. The world is full of excellent ideas that went nowhere, not because they weren't useful, but because no one knew they existed. The myth of build it and they will come is exactly that, a myth. In this chapter, Thiel takes aim at the Silicon Valley obsession with product. Founders love to tinker. Engineers love to code. Creators love to create. But too many startups treat sales and marketing like second-class work, like it's not cool or technical enough. That's a massive mistake. In reality, selling is just as important as building, maybe even more so. If no one knows about your product, or if they don't understand it, or if they don't trust it, it doesn't matter how revolutionary it is. Thiel shares a sobering example, the Segway. Technologically, it was impressive. It worked flawlessly, but it flopped. Why? Because no one thought through distribution. They assumed it would sell itself. It didn't. Meanwhile, PayPal wasn't just about tech. It was about growth strategy. Thiel and his team deliberately paid people to refer friends. They gave money away to get attention. It wasn't a fluke. It was sales engineering. That's the big idea here. Sales is not just closing deals. It's a system, a strategy, a science. Let's break down the ways Thiel categorizes sales. 1. Complex sales. This is when you're selling a high-ticket item to a few key decision-makers. Think enterprise software, government contracts, or multi-million-dollar hardware systems. The sales cycle is long, it's relationship-driven, and it usually involves layers of approvals. Thiel's advice? In complex sales, the CEO must be the chief salesperson. No one else can convey the vision and build trust like the founder. You're not just selling a product, you're selling confidence in your company's future. A great example is Elon Musk selling Tesla Roadsters or SpaceX launches. These weren't cold calls. They were bold, direct, personal pitches to people with influence and capital. 2. Personal sales. This is selling directly to individual customers, often in person or over the phone. It's less high stakes than complex sales, but still relationship-based. Thiel gives the example of solar panels. They might seem like a consumer product, but they still require someone to explain the value, calculate the savings, and win trust. The key here is having a scalable system of trained salespeople, not just a bunch of enthusiastic generalists. 3. Dead zone, no man's land. This is the most dangerous category. It's when your product is too complex for viral growth, but too cheap to justify a direct sales team. Think of a product that costs $100 or $200. too expensive to sell with a web ad, but not expensive enough to fund a dedicated sales force. Thiel warns founders to avoid this pricing trap. If your product falls into this zone, you'll struggle to grow without either raising your price or changing your model. 4. Marketing and advertising, mass sales. This is where your product is low cost, has broad appeal, and can be sold to millions. Think toothpaste, apps, or headphones. Here, branding and messaging are everything. But Thiel says, don't be fooled. Even mass sales requires skill. Look at Apple. They've mastered both product and marketing. Their commercials are emotional. Their product launches are events. Their brand stands for something. That's not accidental. It's strategic sales at scale. He also dives into viral marketing, the holy grail of modern startups. Everyone wants their product to go viral, but most products don't. Thiel reminds us that virality isn't luck, it's designed into the product. Take Facebook. It didn't grow by accident. Every new user invited their friends. Every interaction pulled more people in. Virality was baked into the experience. So if you want viral growth, you need to engineer it, make it easier, faster, and more rewarding for users to share your product with others. Now, let's talk about something uncomfortable. Distribution is hard. It's not glamorous, it's not what founders daydream about, but it's what separates the winners from the forgotten. Thiel quotes venture capitalist Mark Andreessen, who says the most common startup failure isn't building a bad product, it's failing to get traction. No sales plan equals no survival. And that leads to this critical point. Founders must know how to sell, not in a sleazy, used car way, but in a genuine, persuasive, confident way. If you can't sell your product, how will you recruit a team? Convince investors, inspire customers. Sales is not manipulation, it's communication. It's about explaining value clearly, authentically, and repeatedly. And it's not optional, it's essential. Thiel gives a few more golden rules to close the chapter. Superior sales and distribution, not product, often determine who wins. Even the best product needs a sales strategy. Selling isn't shameful, it's survival. So the next time someone tells you, if your product's good enough, it'll sell itself, smile politely and ignore them. Because in the real world, if you build it, they won't come, unless you sell it. Chapter 12. Man and Machine. The future isn't man or machine, it's man and machine. That's the core argument Peter Thiel makes in this chapter. At a time when artificial intelligence is portrayed either as our savior or our doom, Thiel takes a refreshingly nuanced view. He says the real breakthroughs happen not when humans compete with computers, but when they collaborate. Let's rewind. Thiel starts by challenging the dominant tech narrative that computers will eventually replace humans. You see this everywhere. Automation taking jobs, robots beating chess masters, AI writing essays. It feels like humans are being pushed to the sidelines. But Thiel says this view is both wrong and limiting. Instead, he offers a powerful insight. The most valuable businesses of the future will be built by combining human insight with machine efficiency. Let's break that down. Computers are great at processing data, following instructions, and doing repetitive tasks with perfect accuracy, but they're terrible at intuition, creativity, and moral judgment. Meanwhile, humans excel at pattern recognition, storytelling, and understanding nuance, but we're slow, emotional, and inconsistent. So why not design systems where each does what they do best? Thiel gives the example of PayPal's fraud detection system. Early on, PayPal faced serious problems with fake accounts and stolen credit cards. At first, they tried using only machines to detect fraud, flagging accounts that made unusual transactions. But the system kept missing things, so they added human analysts to review flagged accounts. The humans spotted patterns the machines missed. Then they fed those insights back into the algorithm. Over time, this human-machine hybrid became incredibly effective. It didn't just automate, it augmented. That's the key concept, complementarity. Computers don't have to replace humans, they can enhance us. Another fascinating example comes from the world of chess. After IBM's Deep Blue beat Garry Kasparov in 1997, everyone assumed machines would dominate forever. But years later, a surprising thing happened. Human-computer teams started winning tournaments. In fact, Thiel notes that the most successful chess team in the world wasn't a grandmaster or a supercomputer. It was a group of amateur players working with mid-tier laptops and smart algorithms. Their success wasn't about raw brain power or speed. It was about knowing how to use technology intelligently. This has profound implications for business. In a world where most companies are obsessed with replacing labor, Thiel says the smarter path is to empower it. The winning companies won't be the ones with the best AI, but the ones that design systems where humans plus machines equals more than the sum of their parts. He gives the example of Palantir, a company Thiel co-founded. Palantir builds data analysis tools for governments, law enforcement, and financial institutions. But the software doesn't make decisions. It helps humans understand complex data faster and more clearly. Palantir's success comes not from eliminating analysts, but from supercharging their intelligence. Now, Thiel shifts the conversation to a more philosophical plane. He says our view of technology reflects our view of human potential. If you believe humans are limited, flawed, replaceable, obsolete, then you'll build technology that replaces us. But if you believe humans are capable of greatness, then you'll build technology that unlocks that greatness. He also pushes back against the AI will take all our jobs panic. Yes, some roles will disappear, but new ones will emerge. Roles that require judgment, creativity, and leadership. The challenge is not to stop technology, but to teach people how to work with it. Think of it like this. A calculator doesn't make math teachers useless. It makes them more effective because they can focus on concepts, not computation. So what does this mean for startups? Thiel says founders need to design with collaboration in mind. Don't just build tools that do tasks. Build tools that make people better. Ask questions like, what does this technology let humans do that they couldn't before? How does it make people smarter, faster, or more capable? Is it replacing something or enhancing something? He warns against the false choice between human and tech. That binary thinking leads to bad products and missed opportunities. The real breakthroughs happen when you combine strengths, not pick sides. One important nuance: not every task should be automated. Some things, like making ethical decisions, resolving conflict, or inspiring a team, require human presence. Thiel reminds us that people aren't just logic machines. We're driven by meaning, emotion, and story. Any technology that ignores that will feel cold and disconnected. He even makes a broader societal point. Progress doesn't mean replacing people, it means elevating them. The goal of innovation isn't to make humans obsolete. It's to free them from drudgery so they can focus on higher-level thinking and creative work. And that's a hopeful message, because in an age of doom-scrolling headlines and AI anxiety, Thiel is saying the future isn't machines versus people, it's machines with people, and the winners will be the ones who build bridges between the two. He closes the chapter with this takeaway: the most valuable companies in the future won't just use computers, they will enable people to achieve things no human or machine could do alone. So if you're building a startup, here's your challenge. Don't automate everything. Don't try to replace people. Build tools that empower people. because the best innovations don't diminish us. They make us more human. Chapter 13, Seeing Green. In this chapter, Peter Thiel walks us through a powerful thought experiment. What if you tried to build a world-changing business that also saves the planet? Sounds like a win-win, right? Well, it's a lot more complicated than that, and Thiel uses this chapter to dissect one of the most hyped and troubled industries of the early 2000s, clean tech. Between 2005 and 2009, investors poured over $50 billion into clean technology startups. These companies promised to solve climate change, replace fossil fuels, and revolutionize the way energy was made and consumed. They had noble missions and passionate founders, but there was one huge problem. Most of them failed. Thiel asks, why? Were their ideas too early? Was the market not ready? Was the science flawed? Maybe. But more than anything, Thiel says, clean tech startups failed because they broke the fundamental rules of startup success. To explain this, he walks us through what he calls the 7 questions every business must answer. And then, one by one, he shows how most clean tech companies flunked the test. Let's dive into each question. 1. The engineering question. Can you create breakthrough technology instead of incremental improvements? Thiel says successful tech companies deliver 10 times improvements, not just minor tweaks. But most clean tech companies offered marginal gains, like 5% better solar panels or slightly cleaner fuels. That's not enough to build a monopoly. You need to be radically better, not just competitive. 2. The timing question. Is now the right time to start your business? A great idea launched at the wrong time is still a failure. Thiel points out that some clean tech startups were too early. They bet on regulatory changes that didn't come or on consumer demand that didn't exist. Good timing isn't luck, it's insight. 3. The monopoly question. Are you starting with a big share of a small market? Many clean tech founders claimed they were going after trillions of dollars in global energy markets, but that's exactly the wrong approach. Thiel says you should dominate a small niche market first, then scale up. Big markets attract big competition, and clean tech companies often drowned in it before gaining traction. 4. The people question. Do you have the right team? Thiel is blunt here. Many clean tech startups were founded by scientists, not entrepreneurs. These founders understood physics, but not markets. They built fascinating products, but couldn't explain them, sell them, or scale them. The result? Brilliant ideas with no business model. 5. The distribution question. Do you have a way to deliver your product? This is where clean tech really stumbled. It's one thing to build a better battery in a lab. It's another to manufacture it at scale, sell it to utilities, and install it across a continent. Many startups underestimated the complexity of distribution, and they paid the price. 6. The durability question. Will your market position be defensible 10 and 20 years from now? Too many clean tech startups relied on government subsidies to survive. That's not a durable advantage. It's a lifeline. As soon as policies changed or budgets were cut, those companies collapsed. Thiel says the strongest businesses have internal durability, not external dependence. 7. The secret question. Have you identified a unique opportunity that others don't see? This is the most important question of all, and the one most clean tech companies failed to ask. Thiel argues that many of them were following a trend, not discovering a secret. Going green was fashionable, so everyone jumped in without asking, what do we know that others don't? What's the truth that isn't obvious yet? Thiel uses this chapter not to bash clean tech, but to show how startup fundamentals apply, even and especially In high-stakes, high-impact industries, passion and purpose aren't enough. You still have to build a viable business. And here's the bigger point. Whenever an industry gets super hyped, it attracts more noise than insight. In the case of clean tech, founders, investors, and politicians all got caught up in the buzz. But hype isn't a strategy. Vision isn't execution. And good intentions don't pay the bills. Thiel gives a great contrast with Tesla, one of the few clean tech companies that actually succeeded. Why? Because Elon Musk didn't just try to be green. He asked the 7 questions. Tesla had breakthrough tech, powerful batteries, sleek design, and real performance. Good timing, rising gas prices, and growing environmental awareness. A focused niche, high-end sports cars for early adopters, not mass-market sedans. The right people. Musk combined engineering chops with visionary leadership. Smart distribution. Tesla bypassed dealerships and sold direct to consumer. Durability, brand loyalty, IP, and infrastructure. A secret that electric cars didn't have to be slow, ugly, or boring. They could be better than gas-powered ones. In other words, Tesla didn't just ride the clean tech wave, it built a surfboard and caught the wave on its own terms. Thiel's ultimate message in this chapter is this: doing good for the planet is noble, but if you want to do it at scale, you need to get the business part right. And that applies beyond clean tech. It's a warning to anyone building in buzzy, mission-driven industries, healthcare, education, sustainability, AI ethics, whatever. You still have to answer the 7 questions. You still have to build a business, not a brochure. Because in the end, saving the world takes more than good intentions. It takes deep thinking, strategic execution, and yes, profit. Chapter 14. The Founder's Paradox. Being a startup founder is like living in a world of contradictions. On one hand, you're expected to be humble, collaborative, and open-minded. On the other, you must be bold, decisive, and often a little crazy. In this final chapter before the conclusion, Peter Thiel dives deep into the strange, contradictory identity of the founder and why this paradox isn't a bug, but a feature of transformative businesses. Let's start with the basic reality. Founders are not normal people. The truly great ones, Steve Jobs, Elon Musk, Mark Zuckerberg, aren't just smart or hardworking. They're obsessive. They see things differently. They bend reality to their will. And because of that, they tend to make people uncomfortable. Thiel says this discomfort stems from the myth of equality. We live in a culture that praises humility and teamwork. We tell stories of collective success. But in startups, the truth is often very different. One person, one founder, makes the critical decisions that shape everything. This creates what Thiel calls the founder's paradox. We want founders to be visionary, but not arrogant. We want them to disrupt, but not offend. We expect greatness, but punish ego. We celebrate individual genius, but demand collective harmony. These contradictions are impossible to reconcile, and yet the most successful founders lean into them. They understand that being a little extreme, being eccentric, relentless, or polarizing, is sometimes what it takes to build a monopoly from zero. Thiel even references history and mythology to make his point. Founders are like the heroes of old, half mortal, half divine. Think of Odysseus, Prometheus, or even religious figures like Moses or Jesus. These aren't average people. They're singular, chosen, and controversial. It's not just metaphorical either. Many of the best founders exhibit traits that border on the mythical or extreme. Elon Musk works 100-hour weeks, bets his fortune repeatedly, and thinks in timelines of decades. Steve Jobs was known for his reality distortion field, his ability to make the impossible seem inevitable. Jeff Bezos built Amazon with a ruthless obsession for efficiency, scale, and long-term dominance. These founders weren't just business leaders, they were movements. They didn't just manage companies, they birthed them, shaped them, and embodied their vision. But with that comes risk. Thiel warns us that extreme personalities can also lead to instability. Many founders flame out, some implode. Others are pushed out by boards, replaced by professional CEOs who play it safer but dream smaller. It's no coincidence that many companies become less innovative after the founder leaves. When the visionary is replaced with a manager, the boldness disappears. The company becomes a machine, not a mission. So what's the answer? How do we reconcile the paradox? Thiel believes that the key is not to eliminate the founder's eccentricity, but to build structures around it. Founders should own a large share of the company so they can steer it without constantly asking for permission. Boards should support, not stifle, long-term vision. Teams should be built to complement, not dilute, the founder's strengths. He also makes a case for founder-led companies lasting longer and performing better. When the person who started the company is still at the helm, the mission stays intact. Vision doesn't get filtered through layers of bureaucracy. That's why investor faith in a founder can be more powerful than any business metric. But it's not just about control, it's about responsibility. Thiel says that great founders don't seek power for its own sake. They take it because they feel uniquely responsible for bringing their vision into the world. They know that no one else will care as much, work as hard, or think as long-term. And that sense of responsibility is what drives them to take risks others won't. At this point, Thiel introduces a controversial but insightful idea. We don't need more founders. We need more great ones. Not everyone should be a startup founder. In fact, most people shouldn't. It takes a rare mix of traits: vision, resilience, intensity, and a willingness to stand alone. That's why cloning startup playbooks doesn't work. You can't just mimic Jobs or Musk or Bezos. Their success wasn't about following rules, it was about rewriting them. And that only works if you're playing your own game. So what does this mean for you? If you're a founder or aspiring to be one, Thiel urges you to embrace the paradox. Don't try to be normal. Don't water yourself down. Be weird. Be intense. Be obsessed. The world doesn't need another balanced, reasonable mid-level manager. It needs you in full force. If you're building something important, expect to be misunderstood. Expect to be questioned. Expect people to say you're wrong, arrogant, or unrealistic. That's the job. That's the price of thinking for yourself in a world of copycats. And finally, Thiel closes this chapter with a challenge to all of us. Don't just look for founders who fit the mold. Look for those who break it and make something new in the process. Because in the end, the future doesn't come from consensus. It comes from contrarians who care deeply and dare greatly. Chapter 15. Conclusion: Stagnation or Singularity. In the final chapter of 0 to 1, Peter Thiel zooms out, way out. He takes us beyond startups, beyond Silicon Valley, beyond capitalism itself, and puts us face to face with one of the biggest questions humanity can ask. What kind of future are we building? He frames it as a choice between two extreme outcomes: stagnation, where progress halts, innovation dies, and the world settles into comfortable decay. Singularity, where technology accelerates beyond imagination, transforming everything, economies, societies, even human life itself. Thiel makes it clear, we can't coast. We're either moving forward or falling behind. There's no neutral, and right now, he's worried we're drifting towards stagnation. Let's break this down. Thiel argues that for all our gadgets, social media, and mobile apps, real technological progress has slowed down. We were supposed to have flying cars, space colonies, and clean energy by now. Instead, we got 140 characters, infinite scroll, and better ad targeting. Sure, software is eating the world, but where's the boldness, the ambition, the belief that we can build radically better futures? Thiel points to stagnation in several areas. Energy, no breakthroughs since nuclear in the 1950s. Fossil fuels still dominate. Healthcare, billions spent, but outcomes improve slowly and unevenly. Education, still using the same classroom model from 100 years ago. Space exploration, once a frontier, now an afterthought, except for a few outliers like SpaceX. What happened? Thiel says part of the blame lies in indefinite thinking, the belief that progress will just happen if we let things run their course. We no longer expect or plan for major breakthroughs. We optimize, iterate, and marginally improve. We avoid bold bets. But the future doesn't build itself. This is where Thiel returns to the core idea of the book, going from 0 to 1, creating something new, not copying, not tweaking, not competing, but inventing. He believes the solution to stagnation is entrepreneurship, real, radical, 0 to 1 entrepreneurship. Founders, not governments or institutions, are the ones who will lead us into the future. Why? Because they're the only ones willing to take huge risks, challenge orthodoxy, and build what doesn't yet exist. Thiel is particularly bullish on technology as the lever to change the future. He says innovation can solve our biggest problems, poverty, disease, climate change, if we let it. But it requires vision, courage, and long-term thinking. And that brings us to the second path, singularity. Now, singularity is a loaded term. It usually refers to the point when AI becomes so powerful that it surpasses human intelligence, leading to unpredictable and possibly uncontrollable change. But Thiel uses it more broadly, a moment when technology advances so fast and so far that the world becomes fundamentally different. He doesn't predict exactly how or when this will happen, but he says we must prepare for it, and more importantly, help shape it. Because the danger isn't that the singularity won't happen. The danger is that we passively wait for it, rather than guiding it toward human flourishing. Here's the deeper message. The future is not fate. It's choice. We choose whether to invent or imitate. We choose whether to dream or to settle. We choose stagnation or singularity. Thiel believes that startups are our best hope for choosing wisely, because unlike bloated corporations or cautious governments, startups are designed for 0 to 1 leaps. They start with secrets, chase bold visions, and, if done right, create value where none existed before. But not just any startup will do. Thiel warns against the startup lottery mentality, founders chasing quick exits, shallow trends, or buzzword-laden fads. That's not how you change the world. That's how you get one more dating app, not a cure for cancer. He calls on entrepreneurs to be definite optimists, people who believe the future can be better and have a plan to make it happen. People who embrace technology not just as a way to make money, but as a tool for progress. He also challenges the rest of us, investors, workers, students, citizens, to support bold thinking, to stop rewarding conformity and start celebrating originality, to ask not what's safe, but what's possible. And finally, Thiel closes with a simple but profound call to action. Our task today is to find singular ways to create the new things that will make the future not just different, but better. So if you're wondering where to start, here's the answer. Start by thinking for yourself. Start by believing in secrets. Start by building something only you can build. Because the future is wide open, and it won't be made by the crowd. It will be made by the creators, the contrarians, the builders, the ones who go from 0 to 1. And that's a wrap. Zero to One isn't just another startup book. It's a battle cry for bold thinkers, builders, and believers. Peter Thiel doesn't want you to compete harder. He wants you to create differently. He doesn't ask you to play the game better. He dares you to build a whole new game. Let's recap the big ideas you'll carry forward. Go from 0 to 1. Don't copy. Don't iterate. Invent something truly new. Believe in secrets. Hidden truths still exist. Your job is to uncover and build on them. Build a team like a tribe. Start with people you trust, who share your mission deeply. Design your business deliberately. Don't wing it. Think through the 7 critical questions. Sales matters as much as product. Even the best product won't sell itself. Humans and machines aren't rivals. They're teammates. Combine the strengths of both. Founders matter. Be intense. Be obsessed. Lean into the paradox. That's where change comes from. But here's the real magic of 0 to 1. It gives you permission to think big again. It says the world still has unexplored frontiers, unanswered questions, and untapped possibilities, if you're willing to go looking. So what's your next move? Maybe it's rethinking your startup idea. Maybe it's rewriting your pitch with a monopoly mindset. Maybe it's finally acting on that crazy belief you've been sitting on for years. Whatever it is, start now. Because the future doesn't just happen. It's built by people bold enough to go from 0 to 1. If this episode sparked something in you, don't keep it to yourself. Like, share, and subscribe so you never miss a moment of inspiration. And tell us, what's your biggest insight from this book? Tag us or drop a comment. We'd love to hear from the next generation of world builders. Remember, the best way to predict the future is to create it. So go create yours. See you in the next one.